Hello, good morning, investors and corporate. Welcome to Digital Roadshow First Quarter 2024 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite NR Instant Produce Public Company Limited to start the presentation.
Hi, so good morning, good evening, wherever you are. Welcome to our Quarter 1 financial presentation. My name is Dan, CEO of NRF, and Kun Penrai, Group CEO. So I may continue to explain if there's no depending on if there's questions, I may accelerate or just continue along the presentation. Okay. So we've slightly changed the format of the presentation based on comments. So we're going to start off with a review of the business and then go into it by quarter, by segment, and then the financial results, our outlook. And then for those who are interested, we have an appendix that we're going to be constantly updating on our path to net zero. You can see here, this is our tagline now, food for generations. So I'm going to start with our business overview. So we haven't really spoken a lot about what we're doing internally on sustainability over the past few quarters. But I just want to remind everybody that we're still very much focused with KPI on people, planet, and performance. We're still driving hard around the 10 sustainable development goals that we're focusing on. And we're still shooting and trying to move as aggressive as possible to the path to net zero. In the past few quarters, we did continue to receive some awards from sustainability to our ESG rating. Oh, there's a cursor. We're now 4 years in a row, the only food company that's carbon neutral. CEO Award, Brand Award, and then Best Managed Company Award by Deloitte. We've slightly changed what we've done in terms of our programs for sustainability. So prior to this, we had been working with several multilateral organizations on sustainability programs that impact our entire food system. And we've changed our focus from specifically working on multiple programs to only programs that have indirect or direct results on 2 aspects of our organization. So the first aspect is our race to net zero. And so this is one of several programs where we're working with the TGO on setting our science-based targets, working with the chairman of the Committee for Innovation, looking at different technologies on ways to move to a path to net zero. Separately, we're also working with WEF as well on their Food Innovation Hub and seeing how Thailand and obviously our country can potentially play a role in terms of what's going on. So this was recently in Dubai, where the United Emirates, they have a future food valley. It's a massive program and landmark area where they plan to build different pilot plants and farming plots all around food security. And so we're trying to explore to see how we can play a role there. And I'm also on the committee for Feeding Change with the Milken Institute. So it's just at Milken Global in Los Angeles. Specifically, the interest is around Food is Medicine program. This is I think, a very unique and innovative program in the United States, which we're proposing in Thailand, actually, where they plan to use food and specifically around sustainable food, clean food, plant proteins, etc., on using that as a way to solve healthcare problems in each country. And obviously, I think the direct and indirect benefit there is that not only will we play potentially as a role as a change agent, leading this drive, but hopefully what we make can also be a part of this ecosystem as well. So you can see here in the first quarter of this year, I think a lot of what we've been doing over the past year in 2023 has shown off. So we've driven revenue margin improvements that's translated into net profitability very well in the quarter one. So this is the highest quarter one net profit we've had as a publicly listed company. Our revenue has slightly changed now with ethnic food manufacturing down to 56%. And then you can see here Asian grocery increasing to 28%, plant-based to 6%. Geographically, there's a slight change because of the nature and volume of retail. So in the prior quarter, we had prior year, North America was our single largest geographic area. Now that has been replaced by Europe. And why do we believe that what we're doing is attractive for investors? So number one, a lot of industries that we're in, as you can see here, are basically, I think, existing industries with good CAGR. So they're growing around 10 to 15% per year. However, I believe that the Asian grocery sector is a completely blue ocean. So it's 120 billion a year. This is basically Asian groceries, grocery supermarkets in countries around the world, and it's hyper fragmented, single owner. I think this is something that we can go into with a vertically integrated strategy and be competitive. And we're already doing that, and I'll talk more about it in the United Kingdom. By focusing on vertical integration, so farm to manufacturing to retail, we're focusing very much on synergies across the value chain, which will result in expanding margins and profitability. And you can see that in this quarter. Our race to net zero is still very relevant. All the supermarkets in the West are still driving very hard. We believe that as soon as we are the first food company to reach net zero, we're going to get a lot of preferential treatment from our customers in terms of shelf spacing and promotion. We're diversified, and our sustainability programs, I think, which made us very famous a few years ago, I think now will have a very impactful impact, not just on what we're doing, but on our company as well. As mentioned, both on a net zero perspective as well as a revenue perspective. So just a recap of our value chain, we have farming to manufacturing, 70% OEM, 30% brand. This has actually shifted a little bit, so we're about 37% brand due to the emphasis on brand at this point. And then we're the only company to sell from farm manufacturing all the way to the end retail downstream outlet in a different country. So I think we're the first Thai company to do that. Most companies do it in country. We're the first company to have our downstream in a different country. So, so the segments are are categorized into three segments, right? So we've got green farming. Currently, we don't own our own farms, but we work with direct farming contracts, and we have a network of farmers. In our second, in the middle of our value chain is manufacturing of ethnic, pet, plant-based, and functional foods, as well as we work with a supplier network in different countries to sell all into our food retail business, which is our omni-channel retail business in the United Kingdom. Our revenue mix has slightly changed now. The colors don't match, I know, but as I mentioned, 44% now is geared toward Europe. Our supply chain primarily still is in Thailand. So we've got 3 factories plus the joint venture in Thailand. And from a retail perspective, we've got our cash and carry in the United Kingdom, and then we've got our Amazon fulfillment and e-commerce platform in Los Angeles. Something which I think I wanted to also explain was our 3-year growth roadmap and how it affects our thinking in terms of KPI. And I believe that we're very much on track to delivering this. So the first one, which we did last year, was strengthening and a focus on our core food business. This primarily consisted of integration and synergy from farm to manufacturing to retail. So how do we flow through as much product to this value chain with the most amount of margin and then driving revenue? The second is how do we focus on our own brand and launching new SKUs and using manufacturing as an advantage. And the primary companies that are involved around this is NRF, City Food, and Bamboo Mart. And our primary goals for this year is delivering revenue growth of 30% with gross profit margins of 30%. We're still very much focused on the future of food, but a slight change. So prior to this, we were very much focused on working with startups. That is now the emphasis has changed to primarily looking at focusing on light manufacturing, still working with startups, but as customers, and really kind of how do we drive our path to net zero from science-based targets and perspective. So that's kind of like securing our future. The past year, which I believe we're going to see tangible results very, very soon, is unlocking value. So over the past 4 to 5 years, we've invested a lot. Now we've been working over the past 6 months now to basically maximize values and synergies or divest some of our companies or seek liquidity through an IPO. These are the companies that are primarily involved, and we are pretty much, I feel, on target to generate about 1 billion baht in liquidity by year-end 2024. Lastly, the 4th pillar of our 3-year plan is strengthening our capabilities, and I'm going to be reporting against these 4 strategic initiatives every quarter. It's all around reorganizing for talent, introducing like a more rigid governance, and then digitalization as a key enabler across the value chain. Our company structure in a simplified chart is we have City Food, which has 2 production sauce plants, which also owns Quantity, which is our pet care company. Just for your information, in case some of you don't know, Bamboo Mart owns all our supermarkets. Boosted NRF owns our e-commerce fulfillment center in Los Angeles. On climate, 350 is basically doing our net zero trial in the northern part of Thailand, and NRPT, the joint venture with PDT, is our plant-based manufacturing plant and store. Just a very quick update on our IPO. So the current status is we're just in the middle of our US audit. We're very confident that it will be complete by end of June. We will be submitting again to SEC in July, and we expect our IPO in December or the year end of this year. The additional changes because of the US markets, and as you know, the Dow Jones all-time high, the risk is back on the table. There's an enormous amount of liquidity. We believe our target now is to probably raise somewhere between 5 to 10% in new shares, raising. If we raise 10%, we should be able to raise $20 million in this public offering in December. So going into a review by segment, starting off with key events that happened in the past quarter. we in our pet food side, we signed 2 large OEM contracts, which is about 1,000 tons per month that will fill up basically 50% of our second phase manufacturing. We've been working with the Federation of Industries from several countries on our supermarkets to diversify our merchandising. And we're going to launch our new Sriracha brand in the United States in July. On the retail side, we divested 1 store in exchange for adding a store in another plant area as well. We actually profited from that transaction. I'll talk a little bit more about that in a moment. We started due diligence on a chain of 10 stores in the United Kingdom, so we have to see how that goes. And we've actually placed offers on 3 new locations in London, and we had a nice collaboration. We hope to launch a collaboration with Alibaba on e-commerce very soon in the United Kingdom. Our net zero pilot it just received the community vote. So that hopefully will start operations in this quarter to next quarter. I already updated on our US IPO. We've actually set up a synergy team now focusing on our value chain. And we have a very good operational organization now in the UK, from real estate to IT to HR, etc., to drive the company forward. So let's dive right into revenue per segment. So you can see here, each segment delivered year-on-year growth with the exception of e-commerce. And the only reason that there is a 10% drop is because one of the companies called Indeed, we no longer consolidate. So we consolidated their results in Q1 of 23. We no longer consolidate the results because another company has increased capital, so they're no longer a financial consolidation company. And what's interesting is that although revenue dropped, EBITDA actually increased as well as net profitability. So on e-commerce, we ended the quarter at around a little over $300,000 in quarterly net profit. On ethnic foods, as you can see here, on a year-on-year basis, we were up. On a quarter-on-quarter basis, we are slightly down. The reason is basically Q4 tends just to be our highest peak season, and Q1 tends to be our lowest season because people have already ordered for Chinese New Year in Q4, and then in Q1 they're just running through inventory. And so we're quite pleased with the growth on a year-to-year basis. You can see here the revenue mix is decently diversified across a few different categories. These are the products that we primarily sell on our branded side, and we export this to 30 countries. We're really pushing for NRF branded products across the world. OEM sales slightly fell, but plant-based has been steady revenue-wise. We have new products being launched. We're pretty excited about our crunchy chili onion and crunchy chili products. I don't know if you follow Momofuku in the United States, but there's some slight controversy over trying to trademark this type of crunchy garlic, crunchy chili, but not here. Anyways, so I think this is going to be a good product for us in the future. We're also coming out with new products, which we're launching in Taipei next week. And so now I want to just talk a little bit about pet food. So in pet food, we hit a quarterly high of 150 million baht in the quarter. So it's the highest revenue on record for the quarter. Here you can see some brief stats about our factory. In our first phase, our production capacity is actually 2,000 tons per month, but that's literally at 100% capacity, like 24/7, like the whole time, right? We're actually averaging around 1,800 tons per month. And so we had great take-up across all our products, across both in our OEM business as well as our export business. Our second phase production, which will bring production capacity to 4,000 tons per month, starts this week, as you can see here. So it starts this week. As I mentioned, this second expansion is an additional 2,000 tons per month. Half of that has already been spoken for, so there's already contract deposits in place, and so we believe that probably as soon as next week we're going to start producing for those customers, and I believe that we'll probably drive production capacity all the way up to probably even 100% by year end, which means is that we have to now look at a third phase production capacity increase. And I think that this is, we've had amazing growth. As you can see here, we grew almost 250% between 22 to 23. And then, you know, I think we're going to probably hit 100% within this year. And then it's just like demand is just off the chart. Just a little bit more information. So you can see here, this is the dry food, the wet food. We have new products. Export is still coming along nicely, but still only 9% of total revenue. So we're pushing that really fast. The key growth for us, hopefully, will be a push into export OEM, where the margins are very good. In Q4 last year, we hit net profit margins of 5%. Q1, we hit net profit margin of 5%. I think in this next quarter, we're going to improve upon that net profitability. The reason is that our SG&A is fixed. We're basically operating production capacity utilization and net sales at a higher level all the time, and so basically our cost per unit actually now is dropping. So we hope to be in line with the net profitability of other peers very, very soon as we move into second phase production, which is kind of like the sweet spot. In terms of our e-commerce business in America, these are the products. Just to remind everybody, as you can see here, Prime continues to be the #1 testosterone brand on Amazon. You can search for it. You can see here this quarter is not a true comparison because it included revenue from another investment company of ours. But if you look at it on a quarter-on-quarter basis, we actually improved sales of Prime. So overall, we're basically spending less on SG&A. So e-commerce now is turning to a profit, as I mentioned, a little over $300,000 for this particular unit, US dollars. And then in Q2, we're actually tracking now to improve that performance. More growth on the revenue side, better reduction and management of SG&A into Q2, and then hopefully into the end of the year. On omnichannel retail, this is our supermarkets in the United Kingdom. As I mentioned, you know, we have the Deputy Prime Minister from Malaysia there, the Trade Commission from Malaysia there. Thailand is going to come soon. If we look at quarter-on-quarter, so Q4 to Q1, on our cash and carry, it actually increased 5%. But if you look at the performance overall, it actually fell. And the reason it fell is because in Q4, we had a cash and carry and a grocery in Chinatown. We divested the grocery for some strategic reasons. And what you're going to see is in Q2, that grocery store will reappear in a different location, very prime and very profitable. So in Q1, actually, it was pure just cash and carry. And cash and carry is like a large format, you know, 2,000 to 5,000 square meter store. So on a quarter, for cash and carry alone, it was up 5% quarter-on-quarter. And if you compare cash and carry Q1 23 to Q1 24, it was actually up organically 38%. Right now, we're doing a lot, setting up national distribution. We've added 2 additional trucks onto the fleet. Oh gosh, okay, I've spoken too much. Okay. Let's quickly go to financial results. Okay, just in the interest of time, I'll continue to, the group CFOs have to just quickly kind of continue. So as you can see here, operational revenue, we've increased every quarter. Slight decrease due to the divestment of one supermarket, but I think we're going to be back on track very soon. So that's really good growth quarter on quarter. I'm not going to repeat the reasons why. We have pretty much a more balanced drive of revenue growth. As you can see here, OEM is basically trending on average, but old brand is actually increasing. Pet food is increasing. Our direct to consumer is increasing. Plant-based is slightly growing as well. So there's growth across every category. From a gross profit margin perspective, it's actually changed over time. So as our revenue mixes together with pet food at 25%, cash and carry at 20+%, it's overall reduced our gross profit margin just due to the revenue mix. But if you look at it in absolute terms, gross profit margin wise, I think we ended quarter one very well actually. At almost an all-time high. If you strip out, if you were to add back in the grocery store, it would probably be an all-time high. On SG&A, as you can see here, you know, we actually said in the last quarter that we're targeting a reduction of SG&A to below 29%, and we've done it fairly well for the first quarter. SG&A representing only 22% of total revenue. On absolute terms, it's actually, as you can see here, trending down, and but this does include some impairment allowance for doubtful debt as well. And for this quarter, you can see we got a clean report from E&Y with no impairment, and so we're very happy and, you know, hopeful that that's behind us now. On a EBITDA basis, what you can see here is that an improvement of EBITDA. What I'd like to highlight here is that if we look at historical EBITDA, and if we were to strip out like the one-time extraordinary gains, we're actually at a very high level of EBITDA at 19%, and this is primarily driven by our focus on core food revenue, synergies across the value chain, trying to, you know, keep costs under control, SG&A under control, and then focus on profitability. That translates also into net profit as well, as mentioned, so same rationale. For those of you who didn't listen, you know, we had some impairment charges in quarter 3 and then in quarter 2 and quarter 4 of last year. No impairment this quarter, so I believe that's behind us. I'm going to end with this slide here so that there's Q&A if any. So for the fiscal year, we're still confident that we're going to hit revenue growth of 30% driven by retail, brand, and pet food, and maybe some CapEx related to store openings. Our target within the next year is to maybe increase one additional factory to diversify our production capability. On a net profit perspective, we target 6 to 9%, focusing on core earnings, synergies, and keeping SG&A below. Here's our store. I'm gonna end now. So, and then as I mentioned, like kind of like focusing on deleveraging, liquidity, etc. So with that, sorry for taking up too much time. I don't know if there's any questions from anybody who's listening. I want to thank everybody for joining us. I think what you'll see is an improvement on a lot of our metrics on a quarter-by-quarter basis moving forward. I think we're working on some exciting things. Can't really discuss at the moment, but I think overall the trajectory is good. I think we're doing some impactful things as well. Just on a recap, I think the stores I think is a blue ocean strategy for us. I'm super excited about that. And as we drive our store counts in the United Kingdom, it's going to continue to drive revenue, profitability for us, both on our midstream and upstream revenue. And then as we generate liquidity, we'll continue to aggressively expand our store count, being tightly wound and being the first Thai food company that is not just net zero, but also the first Thai food company to be vertically integrated overseas from a downstream perspective. And so with that, I'd like to thank everybody for listening to us and joining us. Thank you very much. Sawadee ka.
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much. ขอบคุณค่ะ